Once again, you are welcome to my channel, fellow traders. Today, once we have knowledge, once we can analyze the multi-time frame, we can analyze the chart from the multi-time frame perspective. That is from the higher time frames. The next thing to focus on are the areas that we can actually map out. From this particular chart, I drill supply. You already have an idea of supply and demand zone. So those are the basics. You can just enter your trade right from there down. But we have some other confluences. Get it? We have other areas that you can at least look at. Once price is coming down all the way from this point to this point, the question is, where are the areas? Where are the possible areas that I can target? When price was coming down, it was actually focusing like a particular point before maybe a retracement or a pullback. If you don't have those ideas, that will also affect you. So I just want to introduce you to order block. Let me use a text. So we are going to concentrate on order blocks. Okay, this is the comment section. So we will be dealing with order blocks. In short, sometimes you just describe it as OB. Yes, and the next one will be fair value gaps. Fair value gaps. Then we move to the next one. That would be liquidity pool. You get it? So we have this liquidity pool, or the word is liquidity void. Okay. All right. So at the end of the video, we just have to know this. When you talk about order blocks, the word order, where we have majority of people like having their orders, you understand, like this around the supply zone, there are always areas where many sellers have at least they have their orders around. They are waiting to enter, especially most of the institutions, the banks, the central banks. And in trading, you just target where those big players are also targeting. Once you are in line with them, it means you have strength, because as I explained earlier in my previous videos, they are the bigger players in the market. They are actually influencing the direction of the market. You as a retailer, you and I, you just have to fit within their system. Just fit in. That is it. So to deal with order blocks, as I explained, areas where we have people placing their orders. Okay, so order blocks are just areas where we have people placing their orders, and always you have to identify from the chart. Always try and identify from the chart. So whenever we take a swing point, or so let's take this one for instance. Whenever we take any swing point, where you always consider the last candle. If price was coming down, the last candle where it took price like to break the last high, you get it? That point becomes an area of interest. That is another block, and they are always associated with one strong candle. Like the candle is very strong. This one too, there was just one speedy candle that came out of this, and based on the strength that came out, they were able to break this. You understand? So those areas are areas of concern in your chart. You just have to map those areas. So let's start from here. We had this swing coming, you get it, and right from this point it took price to go all the way, just breaking this point. So because there was like a high or a strong candle, and at a particular point, based on the strength of this candle, we're able to break this part. This place becomes another block. So if you are drawing another block, you just click on this one, then you draw right on the last candle that was formed, yes, before the movement. So the last green candle like this. Right after this particular video, we are going to draw more, so at least you know what it is and how to identify them well. But always associate your other blocks from the point that was able to at least break this point, and they are always associated with higher candles. You understand? They are very strong. That is it. That is what I mean. So from this point to, you can see that when price go to this point, at least we had this small candle like the bearish. This was a sell candle. So right from this, there was that bigger candle that came out. So that one too can also be targeted. You understand? Because when price was moving, let me this one, so bullish will be, you can just make it other block, but I don't know how the design will be. So this one to template, just bullish will be, or OB means other block, and the bullish means like areas. These places were meant for the buyers to enter. So people bought from this point to all the way up. You understand? When you come to this phase 2 here, we can see that right from this small candle, at least we have that bigger candle going like that, and you can also draw one from there. Okay, so these are just internal ones, you get it? These are just internal other blocks. This doesn't look well. Let me draw it again. So here is another block. Okay, so within this move, at least when price was coming down, when price is coming down, we expect it to respect around this area. Okay, so like that, where we have those bigger candles going up. Here too, we can see that from this place, right from this place, we're able to break this high. You understand? So here too becomes our other block. You draw it like this before it happens. Okay, so we use the last red candle, and the strongest other blocks are always associated with a bigger candle, as I explained. Okay, once I'm done, I'll just explain the bigger candle too. So here the last candle is this one, because this was also a strong move. You get it? Here was a strong move, and it's used that base to close this, like at least to break that particular high. So this one too is another block, though it was mitigated with time. You understand the meaning of mitigation. So all these places where we've marked, we are just expecting, when price is coming, we are just expecting price to respect these areas. Those will be our point of interest, where we'll be placing our trades. So when you go through the chart, you'll be able to analyze these places. So this one too, we have this small order block here. You get it? Because from here it went all the way up, but another place is here. We have this other block too, because here seems to be strong as well. So when price was coming, you can see that right on this, right when price hit this place, we had that bounce. This one too, when you extend it, when price hits this particular point, at least we had that small retracement, though it wasn't that strong. And also look at this point too. You know, we had that strong movement right from this place. So here too, it was another block. So mostly, since price moved rapidly, speedily from this point, it means there were a lot of orders. That is the meaning. Like, once you have a bigger candle, the expectation is there were bigger volumes there. Like the banks were there, people with strong move were there. You understand? So this place becomes an area of interest. You just have to have it in mind. Yes, but it should always follow the trend. Like, though you can map it at any area, but once it follows the trend, like, it becomes a confluence for you. So other blocks that are in line with the trend is always key. So you can see that once price go to this point here, because it wasn't in line with here, price was actually coming down. So around this point, maybe based on your analysis, you know that, oh, it's possible price will go through it. There will be other areas that you look at. Once we get to that point too, you understand. Okay, so we are done with mapping out other blocks. The next one is fair value gaps. Sometimes it's termed as liquidity void in other places. You know, whenever price move, look at this candle. Price move, before price will go up like that, like once it goes, price has to come down, like balance the movement. When we have any movement, there should be a balance. There should be a balance. If there is any movement, there should be a balance. You understand? But if you look at this place, when price was moving from this point, there wasn't any room given for the sellers to come. There wasn't any room. Actually, like, it moved in one direction. And whenever market moves in one direction, it creates an imbalance. The system is not balanced. It is not fair. You understand? They didn't give the sellers opportunity. It's like one person brought in huge amount, or maybe around that particular time, only buyers were around. And once this happened, always market has to come and fill those areas. Market has to come and respect those areas. So these areas are what we call the FVGs. So here, with this area, because there wasn't any movement like this up to this week, it's an FVG. You understand? It's this place has to be filled. At least we should have a wick coming through it. Look at this. Let's look at this example. So here, let me name this first. First of all, let me delete it. Initially we had price, like, you know, this candle close here, then it opened here, then price went high, like it went up. That was the buyers. Then the sellers pushed the price down up to this point. Then the buyers pushed the price to this point. Then the candle closed here. Another hour begin. We have 2 hours. So around this point too, price close around this point and move. It's first of all, because the sellers were in, they moved price down. Then the buyers came in, pushed price up. Then the sellers still believe that price should still go down, so they push it down, and price close around here. At this point, when price close, you can see that the sellers push it small, then the buyers push it with a high volume. Like the candle is very strong here, so they push it with a high volume. But we can see that so the sellers were able to push and fill the space that wasn't filled. So this was a fair value gap. They filled that area. You understand? The same like goes on. So here the buyers came in and they pushed price all the way up to this point, but because the buyers were dominant, so later on there was supposed to be a room for at least the sellers to also fill this gap. You understand? So price came all the way, filling those void, like those gap, and those areas are fair value gaps. They are all places that you can use to place your trades. This one, just look at this, just one boom candle, strong. If traded boom and crash, this is a boom. You understand? So here was a one strong candle and it was serious. You can see that. So once price move in this direction, so all these candle from this point coming, they were like it is a FVG, fair value gap. Here they are supposed to be filled. We are supposed to compensate for that flow, at least for the system to balance. Yes, another part of the equation. For it to balance, the candles must come fill all the way down to where we have the last bearish candle. So these areas are very key. You understand? And what it's telling you is once price rose in a speedy form from this point, this order block, it means this order block is very strong. It has higher volume. People are having higher orders there, bigger amount. So if you are taking any decision, you have to be here, wait for it here. Okay, just look at this place too. We had price just around this zone. We had this strong move, then another strong move. Here the sellers, they push it small, but it didn't come all the way down to this point. So it means our fair value gap is just this place. That is our FVG up to this week. So here it has to be filled. So when price goes, like, it has to come down and fill the area here to when it goes to this, the sellers came in, they pushed the price then all the way up to this point. You understand? So this point was also left unfilled here from this week to this week. Let me draw it well. This week to this week. It means this place too has to be filled. That is the fair value gap. You get it. I hope at least you have the explanation of other blocks and FVG right now. We will be using it mostly with the other blocks, so you just have to understand the concept. We have liquidity void. The liquidity void, this one, like when we have a bigger candle, it's the same as the FVG, the fair value gap. But because this is very strong, like you can either call it a fair value gap or liquidity void, but the liquidity void is mostly used for candles with larger volume, strong candles, bigger ones. You understand? This one, when you go to the higher time frame, you see that all these places are just one. If I go to the 4 hours, okay, within the 4 hours, this is how it is behaving, so it was okay. You understand? So you can see that we have a lot of FVGs. This one, there was an imbalance here, like this. Always try and identify those areas, because when price went all the way up, it tried to fill. For price to come down, like the sellers, they were trying to fill these areas where the place that were deemed void, all these places were filled all the way down to this other block. So you can see that this other block, when price got to that point, we had that retracement. Price is going up again. You get it? Okay. You can, when you go through, at least you are going to find a lot of void here. You see that at least we have this fair value gap here. That was why I was trying to explain the fact that price can come all the way and fill this void. So with this chart, price can go all the way up here and fill that void, though we have our supply zone here, but because of the fair value gap here, it doesn't make the supply strong. You get it? So the best thing is we can just extend it to this point like this. At least we are expecting price to respect that range. So this is the void I was talking about, from this week just to the upper part of it. We have that small void that can be filled, and price is likely to go through like that, like close around this point, then come all the way down, which means if you are selling, you can just, instead of selling it around this point, you can just position, you have a short, so you can just place your trade here, and this is giving you something like your risk to reward ratio will be very big, like that's from that area to this area, 3.82, and you can just place your stop loss here, making like just 6.83. So if you are losing just maybe $100, you are gaining 6.83 times the $100. That is the essence of it. I know you've already watched the first video. Okay, so just understand, go through, identify areas of interest, but mostly other blocks. The strongest other blocks are associated with, always the other blocks are associated with big moves. They are associated with fair value gaps or liquidity void. All right, I hope now you understand the meaning of other blocks. When you talk about other blocks, you understand. When you talk about fair value gaps, you understand and liquidity void. You can just, I have just this small information. You see, we have these green candles. This, where this candle came all the way, like we have this big candle, that is the fair value gap or the void. It was formed right after this candle, and it took this point to break this point all the way down here. So here becomes a valid order block. Another block must always break, like a valid one must always break a particular low or high. So here it took this point to break this point. So here it was a strong candle, so you mark this place as another block. You get it? So it's the last bullish or bearish candle formed before a strong impulsive move. Okay, and the fair value gap, as I explained, is a price imbalance between buyers and sellers. It has already been explained. Well, because there was an imbalance, the system wasn't fair for the other side or to the other side, and price has to come all the way down to that place. The same thing, liquidity void. So they've added liquidity, but that will be in my next video. We are going to tackle liquidity in my next video, and at least we are going to get all those in place. All right, this video, please like, comment and share. Like, comment and share. If you've not subscribed, if today is your first time viewing my video and if not subscribed, please try and comment. It is very, very important for me. Subscribe, share with your friends. Let us come together on board and discuss this thing in detail. Together we can at least get something from the markets. All right, thank you.